You're on.
All right, it's terrific to see that you've joined our webinar, Trading in 2016, Bring It On. I'm Louise Bedford. Chris Tate is my business partner. Chris and I have some freaky trading insights that I'd like to share with you today on this webinar. We're going to give you everything we can in the time that we have available, and then I'm going to tell you how to get more information at the end of this webinar. So let's just make sure that you're in the right place. This webinar is for you if you've got a sneaking suspicion that there are other people creating a great lifestyle for themselves that don't require dollars for hours or a 9-to-5 slog. Or maybe you're sick of treading water or slipping backwards in your share market returns. Or perhaps you've been on the wrong side of the trend before and it's hurt you financially. Or you could be frustrated by your trading results and you want a paint-by-number system so you can achieve the lifestyle you deserve. Or maybe you can taste trading success, but you just don't know how you're going to achieve it. If that sounds like you, then stick with us throughout this entire webinar because the basis for your escape from this situation is buried within it. My business partner is Chris Tate, and we're here to tell you that you may be losing money, no matter how hard you try, but it's not your fault. Don't spend another minute blaming yourself. It's our goal to help you trade confidently and safely so that the money that you make from the share market will stick in your pocket. We've helped thousands of traders, and we can help you too. Let me tell you a bit more about us. I was a manager for a credit information company, and Chris Tate was a scientist and then later a broker. He actually has floor trading experience, which is quite rare because we don't have a floor anymore. Between the two of us, we have nearly 50 years of experience. Plus, as you already know, we're both best-selling authors of books in our own right, and we've been full-time traders for decades. We don't want you to go through every aching step that we had to go through. We've traded our personal accounts, and we still do, and we know that the strategies and techniques that we share, we have personally implemented, and the traders that we have trained have implemented successfully as well. Basically, we've been trading since Bob Hawke was Prime Minister. We're here for the long term, we're solid, we know our stuff. We produce outstanding trading results. Now, I'm going to hand it over to Chris Tate, my business partner, my friend, and my fellow trader. He's going to talk to you about trading in 2016, Bring It On, and I'll join you towards the end of the webinar.
Thank you, Louise. Good evening, everyone. Thanks for joining us. My job for probably the next 30, 35 minutes, maybe, depending on how we go, is to talk about trading in 2016, but what I will do is I will do that with reference to things I've noticed this year, lessons we can take from what we've seen go by. But before I begin, there's some housekeeping we have to go through. The first is our general advice warning. We hold an AFSL. We are actually licensed to give financial advice, but there will be no financial advice given in this session. This session's educational and educational only. In terms of the theme of what I'm going to talk about, I'm not going to make any predictions. Markets are inherently unpredictable. You've all undoubtedly come across people who claim they can predict markets. Unfortunately, they all seem to be still living at home with their mothers driving a 1978 Corolla. That's how good their predictions are. The problem is we are seduced by the notion of prediction. We want to, in some way, know the future, even when that future is unknowable to us. And as I said, markets are unpredictable. At our current state of development and understanding, we simply have no idea what will happen. Anyone who claims to be able to predict markets is either mentally unstable, trying to sell you something, or they simply don't understand how markets work. But not being able to predict a market is actually really quite liberating, because the moment you make a prediction, you are emotionally invested in that prediction. Towards the end of this year, there was a little bit of a Twitter war going on between a series of oil analysts who all predicted what the price of oil would be at the end of this year. To an individual, they all predicted it would be around $100. Their justification for it not being $100 and currently struggling to hold $40 was the market's wrong, but their prediction is correct and it should be $100. They are so emotionally invested in their prediction, what they've said will happen, that they can't let go of that. And we actually don't want that. Trading requires a degree of emotional ambivalence towards your trades. You don't want any form of investment in the trade whatsoever. The moment you're invested in the trade is the moment you lose control of yourself and you in turn lose control of the trade. There will be people who will offer you predictions. Unfortunately, most of these predictions come straight out of their asses.
Great. So I don't know whether you can say that on a webinar.
Oh, sorry, I just did. Because that's where they come from. We don't know, I don't know, you don't know. It's as simple as that. And the theme of what I will talk about in this presentation is the notion of strategic versus tactical trading. The majority of the time, people are obsessed with the minutiae of trading. They're obsessed with what number their moving average should be. Should it be 17 or 18 or 19, as if there's a difference? They're obsessed about what news program they should watch, what magazine they should get, what website they should subscribe to. These are all tactical decisions. They're myopic. They don't actually help you with the trading process. And they don't help you with the trading process because you're unable to step back and understand the environment you're operating in. You're so focused on the one task, on the one thing, that what stage or state the market is in is completely opaque to you. You can't see it. And this makes the notion of trading so much harder. Your trading becomes suboptimal because it doesn't matter how good you might be as a share trader. If the market is not conducive to that and you've not paid attention to that, well, then everything you do will be suboptimal. It's unfortunate that traders by and large are like children who watch TV. Anybody who's had a child and has watched them sit in front of a television will know that they sit a few centimetres away. Their young brains are being completely overwhelmed by all the information they're receiving. They're entranced by the flashing lights, the sound, the changes in colour. They don't actually understand what's happening, but they are entranced and excited by what they see. They're being entertained. Back in the day, when exchanges had market display areas, these were always full of people who would stand up against the terminals and they'd stare at them myopically like children watching TV.
I used to go at lunchtimes and see them down at the stock exchange, and there'd just be this line of guys all looking at the screen, and I'd wonder, what are they hoping for? But yeah, it turns out a lot of them, I'm sure, didn't know.
They were hoping for a lot and getting very little because they're watching the colours change. It was going red, it was going green, it's going back to red. And they were unable to understand that all that was happening was they were being entertained. And the disappointing thing about trading is that once you look at some of the deeper research on it, you realise that these questions have already been answered. The majority of people trade not to be profitable, but to be entertained. And that's a surprising conclusion for people. People are more interested in being in the action than being profitable. Being a tactical trader keeps you in the action. It gives you something to do. And in many ways, it is a pushback against the statement by Thoreau that all men lead lives of quiet desperation. Because in those moments of being distracted, of being in the action, you don't feel so desperate. You're actually doing something, or you think you're doing something. It's a little bit like the emotions that people feel when they buy a lottery ticket. A lottery ticket gives people, I don't know how much a lottery ticket is, $15. $15 worth of hope and entertainment for a brief period of time. They are pushing back against their life of quiet desperation. Traders do the same thing. What I'm more interested in is an overview. It's looking at what the big picture is, of seeing what is actually happening in the world and how that affects me as a trader and what my trading decisions should be. So in terms of looking at this year, This is a little bit of a league table of major world markets and how they performed year to date. And I put this together earlier in the week, so it will change undoubtedly a small bit towards the end of the year, but it gives us a scorecard as to who's done what. You can see that the Nikkei has been the best performing market. It's up 12 and a bit %. You can see the Hang Seng's been the worst performing market, down 5.5%, and we sit down we're down about 4.7% currently. So you can see there's a range of markets, there's a range of returns, but there's a problem with these numbers. And the problem is that simple percentage returns are misleading. We actually need to know about the trajectory or how they got there. This is why hedge funds, superannuation funds, managed funds of any sort quote percentage returns, because they are misleading. They don't actually give you the full story. They don't tell you what journey you might have undertaken to get to that return and how palatable that journey might have been to your psyche, how you might have survived any drawdowns, any bumps in the road. So if you look at our market, and this chart has two features to it. The first is simply price, and underneath that is volatility. I simply plotted a 30-day historical volatility with a rolling long-term average of the long-term volatility. And the picture described by price for our market is really quite simple. We had a bit of a bump early in the year. We went sideways for most of a quarter. And since then, it's just been a drift down as we've been dragged down by our commodity stocks and general malaise. But down the bottom is where I want you to concentrate, this notion of volatility. You can see that for the bulk of the year, our market has had above average volatility. We've been above average in the long term. And this is an important thing. It's something to note. But there's something I have to say beforehand. Just because our market has gone down does not mean that it is more volatile. Downtrends are not more inherently volatile than uptrends. But the point here is that we've had a perfect storm. We've had a market that's trending down and we've had high volatility. Despite what people say, high volatility is not conducive to effective trading.
You do hear that though, Chris. People say volatility is your friend. I have never found that as a trader. I've always found it disconcerting and it stops you out when you're not expecting to be stopped out.
Unfortunately, it's one of those idiot things that people say that has no basis in fact. It's one of those catch cries that people in markets often say. But the key with this is that you have a need within your system for a volatility filter. Within the mentor program, we're red hot on volatility as a filter, as a tool, because it conveys so much information. But it conveys information that is different to what people think. Now, if we look at the best performing market year to date, the Nikkei, you see that uptrend early in the year. That uptrend early in the year was combined with below average volatility. And this is the thing we're looking for. It is this combination of trend and low volatility. And it's only by having a mechanism that puts them together that you can actually isolate these trading opportunities. But it's important to note, and this is a mistake that people make. They misunderstand what volatility is, and they misunderstand that volatility and trend are not the same entity. Part of the misunderstanding of volatility is, I'm forever hearing talking heads on TV saying that an instrument has downward volatility. There's no such thing. Volatility has no bias. In a very simple example, let's say I have an instrument that's valued at 100 and it has a 30-day volatility of 20%. In the most basic of terms, what that says is in the next 30 days, I can expect price to trade somewhere between 100 plus or minus 20. That's all it says. Doesn't say it's going to go down 20%, doesn't say it's going to go up 20%. Now, trend and volatility are not the same. They're completely different entities. And that's very, very important for people to understand.
One of the things I think with volatility as well is that people think that it's quite a mathematical concept and it's quite confusing and hard. But really what we've found is because charting packages create that volatility indicator, it's really very easy to understand. You don't have to do any maths to be able to be good with this. It's something that is perhaps a myth that you might have in your brain there. It's more about applying a system again and again to produce replicatable results.
It's simply about understanding the basics, and everybody can.
Chris has got a little bit of a cough tonight, guys. So we have got pouring rain in Melbourne here. I don't know where you're listening from, but Melbourne has certainly got a little bit of a cold snap, and I think it's gone right into Chris's lungs.
It certainly has. So in terms of volatility and trend, the thing we need is we need trends to be profitable. And it doesn't matter what investment vehicle you use. It doesn't matter what investment system you use. You need a trend to help you to be profitable. Now, you could sit there and feel all patriotic about buying BHP, Rio, National Bank, ANZ, and any other Australian stock. You might get a warm feeling in your nether regions because you own them. But unless they're going up, it's pointless. They're just paperweights. They're not doing anything for you. So what we're searching for are trends, and that's the thing we need to see. It's the thing we need to operate within. And it really doesn't matter what mechanism you use or what your philosophy is. If price is not moving, and it doesn't matter what instrument, what time frame, you're merely just spinning your wheels. Nothing's happening for you. And to give you an example of this is the S&P 500, very large US index. I use and quote the S&P 500 in preference to the Dow, simply because the S&P 500 is a professionals index. Here's a piece of homework for you, and you'll understand why I say this. Look up the construction of the Dow and how it's constructed and how amateurish it is in its construction, and you will understand why I've made that statement. The thing about the US market is it's currently taking a break from a tremendously powerful bull run. And you can see from this chart that for the majority of the year, it's gone sideways. It fell out of the congestion for about 6 weeks and has currently climbed back in and is congesting in the same range again. This sort of market, this sort of environment is extremely difficult for anyone who owns an asset. And this is the thing we want to avoid. But as I just said, this has come as an interregnum to a very, very powerful bull market. And if we pull back, if we look at that strategic view I was talking about, you can see the strength of this bull market. Now, this chart has 2 blocks isolated on it, and it's generated from the beginning of the GFC. And you can see the end of the GFC and the trend that the Americans have experienced for the past 7, 8 years is encapsulated in this channel.
And that's where most of our traders have been making money as well, because really what they're looking for is that clear trend with that low volatility so that it's a simpler trend to trade.
And this implies that there is a time to be in the market. There are phases of the market that are conducive to trading. And particularly this latter section of this move, the second blue block, has been extremely powerful for traders. And it has certainly outperformed anything our market has generated. And to put that into context and give you an example, this is the S&P 500 versus our ASX 200. You can see from about late 2004, our market performed very well. It actually outperformed the US. Then the GFC arrived, both markets collapsed. They suffered the same drawdown effectively.
Almost the same shape too.
And you can see the recovery from the US market has almost been linear. We recovered a little bit post-GFC and then stopped. And come late 2011, early 2012, US markets just took off. This is telling us something very, very important. And I'm going to make a very blunt and dogmatic statement.
That's not like you.
If for the past 3 years, 4 years, you've been trading the domestic market, you've simply been wasting your time because your returns will have been suboptimal. The big returns for equities traders have been in US markets. That's just the way it is. So you need a mechanism, some tool, some facility that tells you when to switch markets. And come 2011, most of the mentor program traders switched out of domestic equities completely. You would be hard-pressed to find one who, other than trading speculative special situations, held portfolio blocks in a local market. Even within the self-managed super funds, they just moved out. So there is a need, again, to be strategic, to work out what market is doing what. And it's extremely important because you could be the best stock picker in the world, but unless the market is cooperating, unless the market's energetic, full of other investors, prices are moving up, your returns will always be suboptimal. You'll simply just sit there stagnating without moving anywhere at all. Now, this implies something very, very interesting. And it implies that there is a right time to be in the market. And there is a right time to be in the market. And it is important to know what that time is. A lot of investors are confused as to what they should do. But if you have a mechanism, a tool that tells you when to switch, your job becomes so much easier, it becomes systematic. It's a little bit like you pull up at a set of lights and the right turn arrow goes green. You simply turn right. You don't have to make any other decision. The decision's already been made for you. But in part, people carry baggage. And part of the baggage is that they're convinced, and they've been told, that they have to be in the market all the time. This notion is rubbish. And unfortunately, it is an enduring myth that has been perpetrated by the sell side of the finance industry, brokers, financial planners, fund managers and the like. And like all myths, there is simply no evidence to back it up. And now, I don't know whether the statement has been made through malfeasance or stupidity. If I was going to opt for an explanation and I had the choice of conspiracy theory or stupidity, I will always opt for simple human stupidity. My guess is the sell side of the industry just don't get it. Now, it's all well and good me saying that, but I actually need to prove it to you. I actually need to give you some form of evidence that this is true. What I've done here is I've looked at investing just in the ASX 200 index. That's all I've done. The blue line is if you just bought the index. That's all you've done. You haven't done anything else. You've just bought the index. And this would be your return for the past 15 years. The red line is if you had missed those months in the index where the index had gone up 5% or more. And you can see it's a markedly lower return. Now, if I just showed you those two lines, you go, yes, it's true. I have to be in the market all the time to be profitable. But that's not all the story. There is another part. And the part is what happens if during your investing you're able to miss those periods where the market has gone down by 5% or more. And that's the green line. The difference in returns is staggering. And the difference in returns comes about because of a very, very harsh feature of financial mathematics. If I have $100 and I lose 10% of it, making 10% on the remaining $90 will not take me back to my starting capital. I need to make 11.1. If I lose 20%, I need 33% gain. If I lose 33, I need 50. Lose 50, I need 100. This is a curve you can't catch in any way, shape or form. So for us, from our perspective, hanging on to the money we have is much more important than any notional gain for the simple reason that markets are harsh. If I have no money, I can't play in any way, shape or form. I just can't play. There are no grants. There's nothing the government will give me. I can't play. But this implies something wider. This statement of a right time to be in the market implies something wider. It implies the notion of that there's a right time to be in any market of any description. If we look at the local market, it's got a turnover on a daily basis of about $4 billion. No small amount of money by any stretch of the imagination. If we look at commodity futures, the daily turnover is $450 billion. Take a step back and look at the biggest player in town, and we find that the turnover in FX markets on a daily basis is in excess of $4 trillion. So you could pick the entire Australian stock market and its turnover for the day and drop it in an FX market overnight, and it would disappear without a trace. So there's a right time to be in every market. And when we look at the returns from commodities markets for year to date, we can see this. You do see a sea of red because commodities have been hammered this year. And you can see that the worst performers have been the energy complex and some of the metals. But again, remember what I said. The notion of a percentage return is misleading. We need to know about the trajectory, how it got there. And this is crude oil, one of the worst performers. This chart's a little bit different. You'll see it's got a series of red arrows on it. This chart uses one of the programs generated by one of the members of the Mintel program. It's designed to catch long waves in energy commodities. You can see it's got the entire downtrend. It hasn't been caught by this false dawn that occurred a few months ago, and it's gone short again. It's important to emphasise that this trading system was built by someone who 6 months earlier had never traded.
So just to go through that trading system, Chris, because I know some people will never have seen that before. What does a blue arrow mean? What does a red arrow mean?
Blue arrow means buy, red arrow means sell. It's a really basic, simple system.
So in this part, these are still buy signals in the first part of the screen.
Yes.
And then from this red arrow all the way through, that's completely a short signal.
And that's completely a short signal. And you can see it catches most of the halving in the price of crude. And it's a very simple system, very easy to design, very easy to implement. Likewise, similar system, different instrument. You get the same picture. You get catch of most of this downtrend that's occurred. And this is intriguing because most energy analysts were insisting that all the energy complex was a buy. Strangely enough, our traders disagreed with them. So without a robust mechanical system, you're lost. And you're lost for the reason that A, you won't be able to manage the information you're receiving, and B, you won't be able to convert that information into any form of signal that's useful to you. This brings me to the question of what about 2016? What does 2016 hold? Now remember, let's go back to my second slide. No predictions, merely lessons and ideas. So my view of 2016 is that it will be the same as 2015, but different. The same things will occur. Now, once again, I've actually just said something that I actually need to prove. It will be impossible for you to identify this chart completely and absolutely. Again, it's a mental program system that someone's designed, and it's been designed to catch bullish spike moves in equities over longer term. And you'll think, well, that's fair enough, that's good, but markets change. So, it might work now, it probably won't work in the future. This is the Ford Motor Car Company from over 60 years ago. You can see it worked then before I was born, and the same system works today. This is a variation on a theme. This was a system designed to catch very short, sharp moves in commodities markets, and it does that. The data is more volatile and sharper, and the reason for that will become apparent in a minute, because this is part of the soy complex from the late 1970s, early 1980s, when commodities trading was just starting. Again, the notion that markets have changed and things that worked then will not work now is completely wrong. What works now will work in the past and will work in the future simply because markets never change. Markets can't change because they're made up of people, and populations are capable of change en masse. Individuals can change, populations can't. So in terms of lessons for 2016, they're really quite simple, because trading, in essence, is really quite simple when you know actually how it's done. You buy when the market is trending up, something most people are incapable of doing. You sell when the market is trending down, also something most people are incapable of doing. And you don't bet the farm, because the key to all trading systems is their management. It's their money management facilities. You can have the best system in the world and poor money management, you'll go broke. And the thing I will leave you with before I hand back to Louise is simply a question. And that is that, do you have a system that performs all of these functions?
I'm guessing that most people don't who are listening to this webinar, and that is something that we can help you with. I want to give you a thought. Where does trading fit for you? Do you feel a bubble of excitement deep in your gut that maybe, just maybe, you've discovered what you're meant to be doing? Have you got that feeling that maybe it'll be a bit tricky if you do this alone? Well, that's why since the year 2000, we've been training traders just like you to become traders in every essence, to be able to switch easily between markets, to develop prowess in more than one instrument, so that if that instrument stops trending, they can actually shift into an instrument that is trending. Can you sense what the mental program can give you? Contacts, courage, focus, so that you can know exactly which instrument to trade and only strike while the markets are ready to drop fistfuls of money into your account. Can you imagine what this will mean for your future, for your family, for your sense of bliss? You see, Chris Tate and I have trained hundreds and hundreds of traders. Here are some of them now. You can see them flashing up onto your screen, and they always bring a smile to my face. These people are our trading peers, and all of them have become independent traders. They're not relying on a black box. They're not relying on talking heads from the TV telling them what to buy and sell. They've actually worked out, with our help, a system that's customized for their own life. You see, our trading systems have been externally audited. We know that they work. It is irrefutable. It's just whether you can work that system and what this can mean for your life. These people are just like you. Their lives are busy, chaotic, different in every way as well. We've got surgeons in there, we've got truck drivers, we've got people who work in factories, we've got teachers and nurses and fire people and every walk of life. And if they have worked out how to do it, then I'm guessing that you can too. I want to chat with you about the Mentor program. You might know that the Mentor program is the hardest hitting trading education on the planet. We have not been able to see anybody replicate this around the world. We'll give you the ability to turn your trading around, and we'll give you everything you need to become a superb trader across every time frame and with every trading instrument. But the bad news is we have booked out the Mentor program for 2016. Competition was fierce. If you want into the Mentor program now, it's by personal interview with me. We have had one person who's had to cut out because of ill health, which is a terrible situation. So if you do want in, it will be me making you jump through hoops. But that doesn't mean that you've missed out completely. Don't give up hope, because I have an ideal solution for you. Now, if you're in front of your computer, go to tradinggame.com.au/prep. because I'm going to talk to you about the Mentor program preparation course. So that prep has to be PREP with a small p for it to come up. So let me tell you about the preparation course. It's an opportunity for you to become a voyeur and soak up all of the information and strategies and techniques that we teach our full mentorees. Now, you'll be a fly on the wall. You'll watch all of our resources. You'll get all the videos, all of the podcasts, everything that the full mentorees are getting. And you'll be able to absorb all of mine and Chris's cutting edge strategies. But the difference is you won't be able to post on our private Mentor program forum. You can see it, but you just can't touch it. And it's only really a minor inconvenience, especially when it means that you can begin the Mentor program in 2016 instead of waiting until 2017 to kick off. Now, the way that I had a friend of mine describe it was, you know, like when you're at school and you have those exams and they say there's 10 minutes of reading time where you get to look at the exam paper, but you're not allowed to fill in those answers. It's just like that. You get 1 year to be a part of the mentor program where you're looking at everything that those people are doing. And the next year, you'll be able to participate fully. When you take part in the 2017 mentor program, you'll only pay the difference between what you've already paid and the 2017 fee. So you'll be offered a position first before anybody else, and you'll be guaranteed our early bird price. So let me tell you a bit more about how all of that side of it works. This year, the full cost of the mentor program to attend the meetings as an early bird is $12,995. But the usual price is $14,995 after the early bird special is over. We throw in so many bonuses that it's even at a discount with that fee. But because you're the type of person who's decisive and acts quickly, you can book into the mentor program preparation course right now and save yourself a bucket load, but still be exposed to the same information. I'll tell you about how that investment works in a jiffy. You only have a few days to act because we're closing off your ability to be a 2016 mentor program prep course participant very soon. So think quick. Our 5-month payment plan is now only open to you because you are a part of this webinar. It'll be closing on Tuesday, December 15th, which is just next week. All right, so now you have two options. Let's go ahead and choose the option that's best for you. Option number 1 for the mentor program preparation course is the payment plan. So for the moment, you only pay $7,995 in total, and it's broken down into 5 easy monthly payments. Option number 2, which is really your best choice, is the one-time payment option. So that's an upfront fee of only $6,995. So that's a $1,000 discount in comparison to the payment plan. Plus, as a preparation course mentoree, I'll post you my complete trading psychology home study course. It's valued at $695, and not even the full mentorees get that. And during the mentor program, you'll also receive extracts from many of our other best-selling resources. You'll have things from my Secret of Candlestick Charting DVD set, our writing options and buying options course, as well as my trading psychology course. And we do have an unbeatable money back guarantee, because if you're not the right person for this program, nobody will put pressure on you to keep at it. You have my word on this. We only want to work with traders who are focused on their own trading success. You'll be joining part of our trading community, people who we have rubbed shoulders with since the year 2000. So we definitely want the right person for this role. So just imagine how much better your portfolio could look when you make trading decisions independently, when every trade you make is based on a logical, methodical method, and that you know with certainty how to trade every instrument over every time frame, but where it is your own trading plan. And I can hear that thought creeping into your mind. I'm not sure whether I can do it. But just remember, countless other traders have done this before you. The course is not on trial. We know that it works. For you, you have to find out in your gut whether this is where you feel that you want to call home. So now it's your turn. Once you've completed our 6-month mentor program preparation course, you will be in control. There'll be no more relying on your broker. You make all of the decisions. You call all of the shots, but with our full support. And once you upgrade to the mentor program in 2017, you'll be able to repeat the mentor program as many times as you like for free. We've had people repeating the mentor program every single year since the year 2000. So right now, you're at a crossroad. One direction leads to the same old, same old. It's you doing exactly what you've done in the past, hoping against hope that this time it might finally work. But the other road, Let's talk about the other road. The other road will lead you to feeling confident, to feeling in power, to a new portfolio, a new outlook and a new confidence. The road that will help you achieve freedom in the share market as an independent trader. And probably that'll be for the first time in your life. And when you're talking about support, we offer unparalleled support. And just as you're wondering about this and thinking, is this right for you? I just want you to know that at the end, the goal is for you to feel really confident and comfortable with your new approach to trading, to take all of the stress out of the decisions that you're facing, and so that you'll know you're entering high probability trades. And how can I say this so confidently myself? It's because we've trained people who are just like you. The most important part here is what your feelings are telling you. You'll know in your heart if this is right for you. You'll know, and that is the key thing. So is it possible that you've just found your new family? A network of traders passionate about steering you towards success? Well, I think so. I think so. For me personally, trading gives me money, it lets me skill develop, but my true passion is actually helping others achieve. One of our mentorees said that helping process where I can see other people change their schools for their kids, change their lifestyle, their holidays that they go on, he said that's your drug, and he's right. If you've already discovered a bulletproof system that lets you make money regardless of market conditions, and you want to add an instrument or two, the mentor programs still could be for you. We've had fund managers, we've had brokers, we've had people with advanced degrees come through the course and still learn. And if you're new at this game, oh my gosh, we can shortcut the process for you so that you don't have to go through everything that we had to go through to learn over our 50 combined years in the market. The Mentor Program Preparation course is your solution. I want you to get ready to get started on your new trading future. If you miss out this time, what's going to be your alternative? What's going to drive you and push you ahead? How are you going to achieve all of the things that you want to achieve? I suggest you get involved because I know you'll never look back. So go to tradinggame.com.au/prep. Check out the full details there. Register right now because we are going to close off bookings very, very shortly. The Mentor program starts on February 21st, 2016, but the pre-season training has already begun, so there is no time to delay. I know how important you'll know that this is for your family, for your personal life, for your social life, but most importantly, it's that you realize you must do this for you, nobody else but you, right now. So go ahead. Come and join our world. tradinggame.com.au/prep. Go there right now. Join our Mentor Program Preparation course and let's get started on your new trading future. We've had a great time on this webinar with you. I'm sure you've picked up a lot of hints and tips here. Scott Lowther, who is our personal systems tester, is in the background. He's helped us organise everything from a technical point of view. And I have managed to drag Chris Tate out in front of you all. He is basically a recluse. He barely ever talks about his trading strategies to anybody but the mentorees. So it's signing off from us, and have a lovely evening.